Market Call Tonight is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
All right, time now for top picks. The first one up is JP Morgan.
Right. So I've already talked about the group as being one that benefits from rising interest rates. JP Morgan is the strong man in the group. 75% of the revenue comes out of the U.S., so it's really focused on the domestic economy. They've got a good commercial banking business, they've got a good private banking business, and they've got a great capital markets business. They've grown their dividend 18% a year over the last 5 years, right? So you're getting a 2.8% dividend yield that will benefit from rising interest rates. They are taking market share from their competitors. It's exceedingly well run by Jamie Dimon and his group. And this is a company that is not paying a high percentage of its earnings out. They've all been held back in the U.S. by increasing their dividend as they were rebuilding capital. So I think that this is a company that's doing very well. The return on equity is north of 10%. It's the only one of the big banks like that in the U.S. right now. And price relative to the group has been steadily improving. So I think that this one hits on all of the cylinders.
Is it a new position for you, or are you just recommending it today?
No, we've had it. I would continue to buy it here.
Yeah.
You know, we've been adding to our financials position over the last 2.5 months.
Okay.
Because if you look at what's been going on with the 10-year yields on bonds, they're moving their way higher. They moved from 1.35% to 1.77%.
Yeah.
Ultimately, that's a tailwind.
Okay. Let's take a look at the next top pick today. It's Google shares.
Right. So we look for secular structural themes that go on whether or not the economy is getting better. And of course, Google is right in the center of digital advertising. Right. Digital advertising is still growing very rapidly and taking market share from traditional broadcast media. Google is the 1,000-pound gorilla. They have growth in many different areas. And you don't pay a lot for some of the skunkworks operations they've got going on in the background that could have real value going forward. The stock technically has consolidated over the summer. It's sitting very close to the highs against a market that's not. So it's strong technically. And you know, this is an area that will grow over 10% a year going forward, and their growth is accelerating. So when you take a company that big, and there's that much cash, and there's that much market share, and they're accelerating their growth rate, what multiple do you pay for that? It's a very attractive franchise.
David, it's one name though that I can't find a bear on the stock. I mean, maybe I'm sure there is one. I hope there's one. But sometimes that is the case. Look, there is expectation built in, but you're only paying 23 times next year's earnings for an almost unassailable franchise. If I were to find a perfect price pattern, you know, it consolidated through the early spring and summer. It's gone straight sideways over the last 2 months. It's within a whisper of making a new high. I think that the setup is very good here. Okay, let's take a look at the next top pick. It's Pioneer Natural Resources, PXD.
So to revisit the way that we look at the world, I look for groups that have become out of favor over a period of time, which energy certainly did into January and February, where breadth has been expanding, and it has been. Now, there are winners and losers when a sector goes through the kind of blow up that energy did. Pioneer is a company that has very little debt, and they have just about the lowest finding costs in the Permian Basin. So this is a company that can drill holes and produce oil for just less than $50 a barrel. They've got 55% of their production hedged forward for over the next 2 years. And they've got capital in the bank there to complete their drilling programs for the next 2 years. So if you think that the price of oil can be anything above 50, they will have the opportunity not only to make money, but to make acquisitions from companies who are not financially sound. So you always look for the company that can win coming out of a tough period, and Pioneer is a great example of that.
What was it that attracted you to this company, though? Why was this on your radar screen?
We've followed this company for 5 or 6 years. It's been a remarkable growth company. It's got a very, very large market cap and growing very nicely. But we always look for companies that are better operators than the rest, and Pioneer clearly is.
Okay, we have to leave it there. Nice to be with you tonight. Thank you very much.
Thank you for having me.
Thank you. Great to be with you as well. And as always, please do consult a qualified financial advisor before making any investment decisions. Thanks again for joining us. We hope to have you with us tomorrow on BNN.